Wow. Welcome to another
Good morning.
episode of Wealth Doctors. Hey, Dr. A, how you doing today?
Doing great. It's a wonderful day. It's a little bit cloudy here in Southern California. How's in Vegas?
So it looks like we're going to get a little bit of a sun break. We've had drizzles the last few days, so I was inspired to see a little sun peeping through today,
Oh,
thinking
nice.
it might be
Nice.
nice. But it's not planned to be like LA weather. I hear it's going to get to 70s or 80s by the end of the week.
Right. Yesterday it was sunshine. It was really beautiful. Today a little cloudy, but it's okay.
It's
We
okay. I'm looking forward to it. Well, I'm so excited because this week we're going to have an amazing conversation about insurance. Oh my goodness. And a lot of times people don't have a clue about insurance, yet we use it for everything, right?
right, right. Well, first of all, happy Wednesday, everyone, and thank you for tuning in and being with us today. As usual, we're here every Wednesday at 10 a.m. Pacific time. And for our new listener out there, if you don't know about us, let me introduce myself quickly. In my office, people call me the legal drug dealer because also a pharmacist. But because I'm so passionate about financial literacy and helping people build generational wealth, that is why I'm here to bring you financial information and tips to better your financial health. What do you think, Doctor?
Oh, it's so perfect. I mean, that's why I'm so excited that we're able to share this time because, it's important and coming from our different perspectives and experiences with people, right? A lot of times, one of the things which people end up having as a problem is something happens to their health. And because of something happens to their health, they find that their wealth has been compromised. And so, you get a chance to see them because, of course, on the healing side, you're trying to help them, with the wellness prescriptions that the doctor has suggested that they take, but then also recognizing that on the financial side, you're passionate too about making sure that not only are they physically well, they're economically okay, to survive that situation. And I think of myself, I'm Dr. Stephanie Ardrey. I'm both a doctor of business administration and a doctor of law. And I like to say that they call me Dr. Money because I have literally been probably the business whisperer, right? It's always about finding ways to create profitable organizations. And so that's a bit of my passion is how do we take businesses and create generational wealth? That was my curiosity as a kid. I wanted to be a global CEO, and I'm so excited that that is, the life that I get to live, but also understanding what's required to build a business from, your garage, if you will, and all of its iterations necessary for growth and sustainability.
I can see you on that trajectory.
Yeah, it's been an exciting, like we say, it's kind of a roller coaster ride at different points, but along that, one of the many of the things that have stood out for me is I remember when I was first beginning very early in my career where I was young and I was young enough to still be on my mother's medical policies. So I didn't have to pay for insurance yet for myself while I was bootstrapping my business. But one of my friends was in insurance. And so what he said is, you don't need this insurance, but because you're building your business and you're like the key person, and if you don't generate income, right, you still have expenses. He encouraged me to get a disability policy so that in the event I experienced any kind of medical emergency or something, all that I had been working to build would not be compromised. And guess what? That was something in my 20s that you would have thought, who's talking about that? But that guy saved me because what I didn't realize, as soon as I was expanding my company, I was going to be hurt in a bad accident that left me unable to perform or run my business for 9 months. And even though eventually there was going to be a settlement, how do you survive for 9 months to a year without any income.
Exactly. It's a lifesaver in that situation, right? When you need it most.
Absolutely. And in
So,
fact, we see it, right?
right.
Banks use insurance. In many states, we're forced to carry insurance on our vehicles, to protect property interest, not only our property, but other potential property that might be damaged, you know.
Right. So, last week we had an opportunity to discuss the importance of starting your retirement saving early. We hope those tips provide you the help to jumpstart your retirement account. So this week we are focusing on different type of insurance and providing basically an overview of each one. Our goal is to provide you with information that you need to make an informed decision, just in case if you need to choose a plan for yourself, to make to choose the right plan. So we hope that this session is going to be informative for you.
Absolutely. So let's kind of talk about that. What are some of the personal types of insurance that people should consider? Because it's always sad. I was looking at the news. We received a notification a few days ago that a member, because it was Martin Luther King Day, one of his young sons passed on I guess Monday or Tuesday of this week. Yesterday, I think they were circulating information about his passing, and he passed as a result of prostate cancer. So what that
Oh,
makes me think of is that there was a prolonged, potentially medical condition. Wonder what type of care he was able to utilize and receive. We'll talk about that because, of course, there's long-term care, as I referenced, having experience with the disability policy, and then there's also not only that, but when someone passes, if you're sick in your 60s, to me, you're a young person, so chances are he probably has still young kids. And
right.
what kind of things we often don't want to people say, I don't want to think about my death. But life policies are not just about death. They're
Like
actually about living.
it's for the living. That's why they call it life insurance.
Yes. But for somehow or another, that doesn't always translate. So what are some of the
Right.
policies that you think are really important that people should consider?
There are different type of insurance, and if you by yourself, you have a family, husband, wife, kids, you're caring for someone, you have a business, most likely you do need some type of insurance, and that will provide you financial protection, income replacement, access to cash, financial stability, legacy planning, and also supplemental income when you at near the retirement age. For high net worth individuals, estate planning, a key person, like you mentioned earlier, for businesses. It's good to have that in place in case if anything happened to them, the main person that running your business. So most of all, it's a peace of mind that the insurance will provide. So today we're going to go into details of each one to see, so you can see the benefits and why do we need them. Um, what do you think? What is life insurance exactly? I in your opinion?
So to me, I see life insurance as a collateral asset in a few ways. Um, I was introduced, let me tell you a personal story, my personal journey. I've always been curious about insurance, and I knew that I was going to really find out the business benefits. I was a longtime fan of Warren Buffett. So, the sage on everything about building, wealth, right? But what I realized or what I learned was that my grandmother knew the importance of life insurance. And so my birth had my grandmother. The story is my mother was young and just finishing high school, and I was to be born. But during the pregnancy, my grandmother felt that she she came up with a story. She said I was going to be famous. There was going to be a movie made about my life, And it was going to be very important that people know that she knew, and therefore that I was born in a private hospital with a private doctor, and that, she knew. So she suggested to my dad's family uh, this idea that I should be born in a private hospital. And they were more like, people been having babies at home, people having babies in a hospital. There's no need for all this extra. So my grandmother um, took a loan against her insurance policies because she decided that it was something that she was going to make happen, irrespective. So that was my, first encounter, if you will, with someone leveraging their insurance policy for a decision that they had made and to be able to execute that decision.
Right. The life insurance can do so much more nowadays, compared to the old days. Now it provides so much benefit, living benefits that give you a lot of protections in case of untimely death, getting very, very sick that you no longer can work and you need long-term care, chronic long-term care, and also outlive your retirement. So it can provide you supplemental income in that sense. But essentially, life insurance is just a contract between the insurance company and the policy owner. So the policy owners and the insurer can be two different people. And for example, if you have minor children, your children can be the insured, but the parents can be the policy owners. So you have to understand, the policy owners and the insurer, or the insured, the insurer, the insurance company, to have a understanding what kind of coverage, like temporary coverage, as far as term life insurance, and also permanent coverage for offering protection for the life of the insured. So we'll go into details of each one, so you'll have more information for that.
Absolutely. So definitely, not only are there a different set of products, but I think a lot of times what people don't realize is that the business of insurance is based on investment decisions, just like any other business. So that influences what type of coverage options are available. And I'm
Right.
glad that you referenced that policies continue to evolve, because they continue to evolve and be adjusted based on the current market demands, as well as insurers mitigating their risk. So they also conduct risk assessments before they offer a particular product, right? Because they're basing it on a particular set of circumstances. When we think about property and casualty, especially when we face natural disasters, right? There are some cases that some communities find themselves unable to secure insurance. If you're in a flood zone, if you're in a high fire zone, some insurers have pulled out of those particular business markets because the risk has exceeded what they feel comfortable with is offering as a profitable way of maintaining and being able to sustain the benefits that those policies are supposed to offer. So when you think about insurance, I think that that's the problem with most people, is they don't consider it from the standpoint of, what does this allow me to leverage? They're going into, somebody told me to get a policy. Okay, get 15, $20,000. Or what does my health allow me to be approved for? Or, oh my goodness, I don't want to pay those premiums because the premiums are too expensive, or all of those things. So, those misconceptions, maybe we can even call them myths, I don't know. What have you found? Are you finding that these are some of the things that people may express when they're considering or discussing why or why not? And it could also be cultural. I don't know. What's your experience with people in terms of their reasons why they do or why they do not have life insurance?
People have different preferences and needs and goals. But if you have a family, you have young ones, you have business, you do need insurance, some form of insurance to help to protect you. I share this myth about the most common myths about insurance. most people would answer, I don't have the money, or insurance is too expensive. But there is a budget. There is, insurance for every budget that we can have that set up. And I also asked a pharmacist group about why would you need insurance? And, a lot of people share really touching information, uh, the reason why they need it, because it helps them to basically protect their family. Essentially, if you are so income earner and you no longer here, your family can your family survive without your income or one income? How about the mortgage protection? How about medical expenses that need to be covered? So those are the things that we don't consider, or don't think about it, but it's out there that we should consider, and basically, get the right coverage to protect you and your family.
Oh, absolutely. I remember having that experience again, with my mom. Unfortunately, she passed suddenly, unexpectedly, and it seems like on one hand that, she hadn't prepared. Of course, her presumption, I'm an only child, so duh, that's easy to do. And I'm the, she wasn't married, so it was clear that but what she did is she actually had a life insurance policy that was in place to pay off the mortgage on the house if something would happen. And so that was great foresight. So when she passed, her house was not a burden to me. It was delivered free and clear. So those kinds
Right.
of things are the kinds of opportunities that you want to be able to take advantage of.
Right. Um, another type of insurance we want to talk about is also term life insurance.
Mm.
A lot of people know about this, and it's very common at workplace because they all offer term life insurance. But this term life insurance is just providing pure death benefit, and it's limited, specified period of time. So it could last for 10 years, 20 years, or 30 years. And basically, if the face amount is only payable if the insured dies within that term. So if the insured is still living by the end of the stated term, the policy will be expired and the new term can be written, but it could be a lot more expensive at that time because it based on the age and insurability and the person's health condition at that point when they reapplied. So, a lot of people said term is sufficient for them to have and get protect. It is maybe at some point, but there are other forms of insurance that can provide you much more benefits. What
Yeah.
other what do you think a person would just buy term instead of other policies?
Well, there's two things that come to mind is I think term is a valuable policy to have as a potential bridge, as a just in case, even when you're hoping, but also I know that there are different types of term policies. Some of them allow you to convert the policy
Right.
into a more permanent policy at a particular point. And sometimes at the time that you secure the term policy, you're able to have it underwritten with that possibility in mind. In other instances, you may have a term policy that you're going to rely upon for certain situations, hoping to then also establish a more permanent policy that maybe you're utilizing for some other purpose. What I think is that where it's important to evaluate and assess your needs is that you want to consider one, what is the situation of your family? As you mentioned, do you have children? What are going to be their needs or requirements over the next 3, 5, 10 years, 20 years, if it is you have young children? Do you have assets that have liabilities that may become a burden if you were not able to contribute either your portion, or if you're the sole breadwinner, if your income was to cease to exist, right? Do you want your family in jeopardy? Are there plans? Do you want your children to have access to resources to begin their career journey? Do you want them to be able to establish their households? I have a good friend that shared with me that she had been a top performing executive at a major corporation, and her and a colleague, they were on par the same way, kind of started around the same time, in the similar earning bracket. But what happened was when they each got married, right? One was able to invest and begin their lifestyle in a significantly advantaged community and neighborhood, meaning that they were able to purchase a home that was 5-10 times more expensive than what it appeared that this other person was able to acquire. And she was a little bit surprised, kind of thinking that we make the same amount of money. Her husband is not any more successful than my husband. We're all at the beginning of the career. And so in a casual conversation, what she learned was that the families had policies that they had put in place so that when it was time for these young adults to establish their household, instead of gifting them with a bunch of liabilities or debt, they were able to gift them with the down payment towards the purchase of their home. And so that
Right.
changed significantly how they began.
Right. That is something that we mentioned last week, the power of compounding. When you start, when your children turning to age of 1 and you establish a policy in place, and that give them a significant amount of time to accumulate compounding interest over 10, 20, 30 years. By the time they graduated from college, they need a down payment for their home. You have access to that cash in a policy where you can take out the money to put a down payment to pay off the school loans or whatever the reason that you need at that point. But there is a policy that help you to accumulate cash over time. So back to the term, the term doesn't have any cash value. So you have a term policy. It's a great protection, in a specified period of time. But it doesn't have cash value as it has limited coverage, and the premium can increases. And also, not all terms are created equal. There are some terms with living benefits, some terms just pure death benefits. So when you get a term, you have to read and make sure you get into the right term as well. Because if there's a chance that the company offer living benefits with that term, go for it, because that is an additional protections for you. But with the insurance, that with cash accumulation, that is much more that you can get more protection for your family.
Absolutely. So if a person is in a scenario where they have a term policy, is there a situation that they should consider having more insurance, or that they have too much insurance? What is the reality of, if I have an older policy but I know I need a newer policy, should I cash in my older policy, or do I keep my older policy and I go ahead and get a new policy? Those are the kinds of things that I think are important for people to understand. How have you approached a person in a scenario where maybe they had an older policy, and as they've gotten to a point where they realize that policy is limited? So maybe they started with one of those $15,000, $20,000, life policies, and they realize that their assets have grown, as well as their liabilities. But yet at the same time, that policy was rated based upon their age. And as they've matured, perhaps their health is not as in the same standing as it was for the rating that they previously received. So now there's this, consideration of, do I take the higher policy based on my health at this time? Do I cash in the older policy? Do I keep that? How do I augment? How would you address a scenario like that?
Our life changes, our needs changes over time, and there are situation arises in our life. So that policy needs to be modified and and adjust based on your needs and goals. So if you have a term policy, most of the term, depending on the company, it can be convertible into a permanent type of insurance. But you have to watch for the period of conversion, because if you have let's say a 30 years term, they give you about 20 years, the first 20 years or 15 years to convert that term into permanent insurance without doing, reviewing your health again, insurability. So when you're looking for a term, if you have to get a term based on because of your need, in some situation, when you get a loan from a bank, they require you to have a term policy in place so that they can collateralize that term. So it is necessary to have that. But if you can convert that term later on into permanent insurance for more protection, then go for that. And also, eventually, you want something that helps you protect long term, so not
Long
temporary.
term.
Yeah.
That is so true. That is so true. You're right. And see, that's the thing that a lot of times people forget is if you're attempting to just do business with your bank and take out a loan, why are they requiring you to have a term policy as well? That should be a key indicator of the importance, but more importantly, the value of having insurance and utilizing the insurance as a tool for your stability, not only economically, but also for peace of mind as it relates to the potential debt or liabilities that you may encounter or that you're taking on, along the journey. So we talked about some of the life uses. We talked about like key man policies. We've touched on disability and the need for long term, and the fact that many policies are providing living benefits. And that's another thing that I recognize, of course, being in the wellness space, being in the alternative wellness space, where typically our wellness solutions are not under medical or personal insurance. But what I know is that if you have a chronic condition and you have a live-in benefit policy, many of these policies, if you receive a prognosis, have certain opportunities and you want to explore alternative treatments, then you're able to have access to that cash to then explore alternative treatment solutions. And I've definitely seen the success. One of my mentors, professors, had been really ill, a cancer prognosis, but he was able to take advantage of resources to go abroad and to receive an alternative treatment method. And, he's been alive and kicking ever since, doing well, able to restore his health, able to, continue his career and continue taking on his family. So in your experience, again, what do you, is that really now a common part of many of the policies that are being underwritten, or is it still a rider that has to be requested?
It's depend on the company that offering the policy. So there are whole life, there's universal life, index universal life. The whole life can offer just a fixed premium and fixed face amount. It may or may not offer the living benefits, depend on what company you are with. The index universal life, usually that is a great alternative. Just like Roth, everybody love Roth, right? Roth IRA, because you can access that money tax-free eventually down the road if you need to do so at age 59 and a half. So IUL can be a great alternative as a Roth because it provides you so much potential, the cash accumulation, the living benefits. Should you need that living benefits to access that cash amount or partial of the face amount for your chronic illness, medical critical illness, you can access that in advance in event of medical condition that you do need to have, to cover medical expenses. So with the index and universal life, many companies nowadays offer cash accumulations, flexible premiums. So I can see a lot of benefits in that sense that you can, establish a plan and contribute to that plan and also adjust based on your need later on, contribute more when you have more money, or less when run into a situation when you have to cut back a little bit. But that is the flexibility of the Index and Universal Life they're offering, and also the living benefits is great. For terminal illness, chronic illness, terminal illness like cancer, chronic illness, critical illness like heart attack, uh, you know, Alzheimer's,
Mhm.
where you need to access the money, and also chronic illness when you need to hire someone to take care of you, when you cannot bathe or feed yourself. Those are the things that you can access the money in advance to help you taking care of that situation. So Index and Universal Life is a great tool to do that.
It's amazing. Every time we get together, before we know it, the conversation has come to an end. I think this is a fascinating topic. I mean, if
I
you want to
know.
gain more information about insurance, feel free to send us an email at info@wealthdoctors.us. Our information is scrolling around the screen, so definitely check that out. Also, mark on your calendar 10 a.m. Pacific time each Wednesday so you can join us again. Subscribe to us on YouTube. And also, this is a perfect kind of foundation, because even next week, we're going to continue the conversation where we're looking at some of the other investment type strategies and tools. And as you start talking about variable life and the benefit of the Roth program and that tool as well, I think that's literally a perfect kind of segue to what's coming next. What do you think?
Yeah, we didn't have time to finish everything that we wanted to discuss today, but hopefully next week we will touch base on that. Thank you for joining us today. We really appreciate you for being here with us. And we are live here every Wednesday, 10 a.m. Pacific time. Please join us next week for more exciting content. And until then, we encourage you to take care of yourself, your loved ones. And if you don't have a plan in place, please consider creating one. If you already have a plan, we recommend reviewing it and also update it to ensure you have the best that it can be. And have a wonderful day.
Absolutely. So, with that, guys, thank you so much for tuning in, and we'll see you next time.
Thank you.